Investors are holding back right now, not necessarily because interest rates are so high, because at that point, it just comes down to price. There's many others who are scared simply because they just don't know how high interest rates might go. But things are definitely changing. We were seeing expectations for inflation go higher and higher month over month, but lately, inflation expectations are finally stabilizing. And once inflation stabilizes, more investors will feel more confident about their numbers, and that's ultimately going to give more confidence to investors to come back to the real estate market. And then at that point, it would just come down to price. If you're new to real estate investing, you might ask, what does this right price mean? So stay tuned because that's what I'll be walking you through in this video coming right up. But before I continue, if you enjoy content like this, don't forget to give this video a thumbs up and subscribe to our channel so that you can see more videos like this made specifically for real estate investors in Toronto. We're strong believers in investing in houses in core Toronto because of the strong holding power and the fact that there's more ways that you can make money with a property, like taking on value-add renovations. But cash flows is really the core thing that puts investing in houses at a different level compared to condos. Right now, condos are cash flowing very negative because interest rates are very high, which means you would have to take money out of pocket each month to hang on to the investment. On the other hand, houses with 2 or more units are still cash flowing positive in today's much higher interest rate environment. And the big bonus is that they're actually a lot more accessible compared to before. Starter bungalows with 2 units are actually going for around $800,000 in core Toronto right now, which is a similar price compared to many 2-bedroom condos, but you're basically getting much better risk-adjusted returns. Now, I know I talked a lot about the importance of cash flow, but realistically, if you're investing in Toronto, you're not looking for big cash flows to support your lifestyle, but rather you want positive cash flows for better holding power. Take a look at this chart that compares Toronto multifamily cap rates, which is basically our NOI divided by the property value stacked against interest rates. One thing that you can see is that even when mortgage rates have been fluctuating, the obvious trend is that cap rates have been dropping. And I think the key insight we can see here is that as Toronto continues to grow as a city, there will be a shift of investor mindset. People are investing in Toronto because they believe in our continued growth prospects. And I know that chart is a little bit deceiving because the drop in cap rates look pretty massive. But once you stack cap rates against appreciation, we see another perspective more clearly. And as you can see, the reason why investors are okay with slightly lower cap rates is because they are in it for the full picture with appreciation. And from a total return standpoint, investing in Toronto is still pretty good. Now that you understand more about what Toronto investors are looking for, let's dive a little bit deeper into cash flows. Cap rate only shows the net income before the mortgage, and it might look pretty different after we factor in mortgage payments. So here is a chart with the annual average cash flows over time, and here you'll see a couple more things. The first thing is that absolute cash flows haven't actually dropped as much over time. It's true that cap rates have been dropping, but because purchase prices have gone up, absolute cash flows haven't actually dropped as much. The second thing is that freehold real estate investors need positive cash flow, and it's not just because of better risk-adjusted returns, but it's also for future growth potential. If you have positive cash flow, it actually improves your portfolio's debt servicing ratios, which will help you get more mortgages in the future. So as you can see, in 2019 and 2020, when cash flows got too close to break even, they ended up creeping back up. Now, 2 years ago, low interest rates definitely helped a lot there. And now, if we go to where we are today, our cash flows are actually looking a lot tighter than normal again. But we're not counting on interest rates helping this time, nor are we counting on rents going up beyond this point because it's already seen very big jumps in the past year. So at this point, we're probably just limited to price coming down a bit more if we want to be back at slightly higher cash flows. And to bring our current cash flows to $500 of cash flows, we would probably need to see another 6% drop in prices. Now keep in mind that this is not an exact science at all. Past preferences might not be the same moving forward. And if you believe that the trend of compressing cap rates might continue, we might end up seeing more investors willing to take on lower cash flows moving forward because today's prices just look a lot more attractive. What we are sure of, though, is that we are getting close to the bottom, and if you get a bargain, it's likely that you can get the same cash flows or better than what we might be at the bottom because we are in such a buyer-friendly market these days. The other benefit of buying right now is that there is less competition and you are in a much lower stress environment compared to when more investors start coming back to buy. So if you want to learn more about what today's deals look like, just reach out to our team. We're a real estate sales brokerage that focuses on investing in houses in multifamily homes in Toronto. When you work with us, we take the time to understand your needs, teach you the ropes, show you these deals, and eventually help you buy the best one for you. But that's not all. Our team also provides renovations guidance, leasing, and property management if you need it. So just connect with us if you want to learn more about our services by heading to the link in the description below. Don't forget to give this video a thumbs up and look for us on Facebook, Instagram, or LinkedIn if you want to hear from us more regularly. I wish you all the best in your real estate investing journey. Thanks so much for watching, and I'll see you in the next video. Bye.